Good morning, good afternoon, good evening, traders from around the world. We're going to take a look at Friday's price action and how we go about determining some trades. So right now I'm going to download the market replay data. Connect to our market replay connection. Okay, I've paused the market here. We got a potential trade set up, and we're going to do a quick determination on whether or not we should take the trade. The first thing we're going to do is we always want to make sure that we're trading in the direction of the trend, the current trend, as much as possible, because that's going to give us an edge. And the reason for that is there's going to be more trend traders than counter trend traders. So we want to make sure that if we're going to take this trade here to the short side, that we have a downtrend. And you can see that overall on the chart, we are moving downward. So it's that quick on determining our trend. We also want to see if we're making higher highs and higher lows. So if we were going to take a short trade, we would want to be careful taking a short trade right here in this area, because you can see we have a higher low, higher high, higher low, higher high. So we would want to use caution taking a trade in an area that looks like this, where we're making higher highs and higher lows in an overall downtrend. However, once we've broken that low, then our trend is likely to continue. So from this point right in here, we're free to look for short trades again, because we've now started back down in a down cycle of our downtrend. So here's our trade setup over here. It's a block break, and what we're going to do is we're going to grab a block here. We're going to put it on our chart like this. So kind of a not so fancy looking block break, but that's what we're going to use for our example. So we need to determine whether or not we want to enter this trade. So our first step before trading at all was, of course, to determine our trend and where we're at in the trend. So we've got a downtrend. We've started our down cycle. We're free and clear to short, take a short entry. So the next thing we're going to look at is there going to be room for our trade to complete? So what we're going to look for is we're going to look for a break of the low of the day. So if we're going to enter, we're not going to enter right here into the low. We want to enter on a break of the low. So we're going to drag our box down here, because we're going to enter in this area on our short. So we need to make sure that we're free and clear to move downward. And we'll scrunch the chart up here a little bit. And as you can see, we're going to target 10 pips on the move. So we'll go up here and grab a measurement real quick. We're going to hopefully get filled in this area, and we want to make make at least 10 pips. So we want to make sure that all the way down to 10 pips, we're going to have a clear area to move. So since our target is 10 pips, we want to make sure that we have no near-term support anywhere back here that's going to interfere with our trade. So that way we know once we get our breakout, the likelihood of it completing to 10 pips is pretty high. We have no near-term area back here that's going to take out our trade and make it reverse. So that's our first step in determining our trade, is do we have room for our trade to complete. The next thing we're going to look at is there going to be support for our stop? And by that, what we're looking at is, once we enter the market, where is our stop going to be? So we're going to come up here and set a 10 pip stop to begin with. Alright, so if we're going to set a 10 pip stop on this, that's going to put us in this congestion area. So in order to for me to be able to take this trade, my stop is going to have to be in this area, 13 pips. So how can I take this trade where I'm going to risk more than my 10 pips that I would like to? Well, what I'm going to do is I'm going to cut my position size in half. By taking a smaller position size, that's going to allow me to take a little bit more risk without going over my 1% account risk. So if I'm going to take this trade, my stop is going to have to be up here at 13 pips away. Then, is there support in this area? So what I'm looking for when I talk about, is there support for your stop, is there an area where I can place my stop where short of that the market has recently reversed? And that's what we're looking at right here in this area. So what we're looking at here is the market had moved down, come back up, then in this area right here we had new sellers come in, or more sellers come in and start driving the market down. So the assumption is, once we enter, the market may move back up, and if these sellers that were here are still here, they're likely to drive the market back down again. And that's going to give us support for our stop, because our stop is going to be outside of that area. So in this case, we do have a near-term area of support for our stop. And the difference being is, let's say we were going to take a trade and we had our next area of support would be back here. All right. For us to do that, we would have to have a stop way up here out of the way, and that's going to be too much of a risk area, because we would have to have the potential of this trade. Say we entered here short, that we'd have to be willing to let the market come all the way back up to this area before heading back down. And as scalpers, we don't want that. We want a near-term area of support for our stop. So we're going to place our stop right here at 13 pips away, and we're going to target that 10 pips. So we're going to try to get filled on the break in this area, and we're going to look for our 10 pips. We'll move this up here. Our stop is going to be 13 pips away. So there's a couple different ways we can do this. Our next set of criteria and final is order flow. Do we have orders coming in? Now this is going to be a breakout, and it's going to be, if it does break out, it's going to be relatively quick. So one thing that we can do is we can set a order here, a sell stop,
order pending,
to get us in the market. And that way, if it does break out, it's going to pick up our order. Now, once we do this, we still want to see order flow coming in, and we're going to use time and sales for that. We want to see that we have plenty of orders coming in, that once our order is filled, these orders are likely to push our order down to profit. So once we start the market moving here in a minute, we'll be watching our time and sales. Now, most of the time, if I can enter on a limit order, that's what I'm going to do. But if the market is not showing a lot of orders at the moment, and I think it's going to be relatively slow on the takeoff, then I may just enter a market order when it goes to break out. And either way, it's up to you which way you want to do it. So we'll start the market moving here again. Now, since I have a limit here placed, if it goes to break out, I'm going to cover this to be able to cancel this order if I think the order flow is not sufficient. So now I'm watching the market, and I'm going to be watching this order flow. Granted, you'll notice I've sped the market up here a little bit, so hopefully we don't have to wait as long. So our first step, pre-trading, is determine our trend and whether or not we're in our cycle is matching our trend for the trade we want to take. So we want to take this short. Now we got new low of the day orders coming in. May make a slight adjustment here. Looks good. Still got plenty of orders coming in. Plenty of room to make our target. Support for where our stop is going to be. We're going to have to move our stop because it's going to preset at 10. You can see we've still got nice build up here to the short side. Still looks good so far. All right, here we go. Some more low of the day orders.
Order filled.
All right, we're in. We're going to grab our stop, get it up here where we need it. Now we're watching our trade for any sign of reversal. I'm going to cover the close button, so if I see at any moment a lot of orders coming in to reverse, then I'm going to want to get out. So far we're still looking good at 6 pips. We're watching the action. Just because I have it set at 10 don't mean I have to get out at 10. If it looks like it's going to reverse, I'm going to get out and I'm going to take the 6 or 8 pips I can get. Still lots of orders coming in here. We're just watching for any sign of a big bullish move. If we see a big bullish move, then we'll likely close our trade. Now see how we reversed here before? We're going to go ahead and move this up one. Try to get more in that area in case we hit a reversal. Looks good.
Target filled.
There we go. All right, so we took our order here. We had all three of our criteria was met. We had our pre-trade criteria of a downtrend, and we waited for a down cycle to look for our short. Then our three criteria for our trade, which is did we have room for our trade to complete, which we did. We had plenty of room for the trade to move down before hitting an area of support. We moved our stop up to 13 pips to get just above our area of support for our stop. So we gave room for, once we got entered, for the market to move back up into this area and sell orders to come back in. In this case, it didn't happen, but that's how we determine where we set our stop. And then we had sufficient orders coming in to actually let the trade fire off. And then you notice, once we got into the trade, we were watching the trade the whole time for any signs of bullish momentum coming in. Not normal ebb and flow of the market, you know, that we have to be set through. But if we've seen a big bullish candle or a lot of orders coming in, typically if the market drops down like one tick and then you see a bunch of orders coming in as the market reverses, you know there's a lot of buy orders there and you'll want to close the trade. But in this case, the market came back down again. If you notice, I adjusted the stop for the profit taking up by one tick. So I decided to go ahead and take 9 instead of 10. And we do that sometimes because of just like this, how the market moved in our favor, moved down to this 9 pip area, then reversed, and then started back down again. Now, a lot of times, the market will be absorbing the buy orders at lows of the day. So we want to be real cautious here. And by moving up and willing to sacrifice that one tick, we were guaranteeing our order fill back in this area. So we got in at 92, we got out at 83. So we took 9 pips on that one. So that would have been a good trade. And that's pretty much how I go about each trade from start to finish.